Hey everyone, welcome back to the channel. In today's video, we're going to cover a fundamental topic that can make or break your interview, journal entries. I'm going to walk you through 21 most important journal entries, not just the what, but also the why behind each one. We'll break down the debits, the credits, and the logic step by step. This isn't just memorization, it's about understanding the core accounting principles. So, buckle up, take notes, and let's get started. Okay, let's start with the basics. Journal entry number 1, purchasing machinery on credit. A company purchases machinery worth 5 lakh rupees on credit from XYZ Limited, and we need to book the journal entry for this transaction. So what will be our debit here? We will debit machinery account 5 lakh rupees and we will credit XYZ Limited creditor account 5 lakh rupees. Why? Because machinery is a fixed asset, meaning it's an item the company owns and will use for more than one accounting period. Because the company is acquiring an asset, the machinery account is debited to increase its balance. Since the machinery is bought on credit, it means the company hasn't paid for it yet. This creates a liability, an obligation to pay XYZ Limited in the future. And liabilities are increased with a credit. Therefore, we have credited XLZ. Moving on the journal entry 2, depreciation on machinery at 10% per annum straight line method for the year. So to book this transaction, we will debit depreciation account 50,000 rupees, and what will be our credit? We will credit accumulated depreciation account 50,000 rupees. Why? Depreciation is an expense. It represents the portion of the machinery's value that has been used up during the accounting period. Expenses are recorded with a debit. Accumulated depreciation is a contra asset account. It reduces the overall book value of the machinery on the balance sheet. Contra asset accounts have credit balances. We have calculated the 50,000 by multiplying 500,000 with 10%. Okay, great. Moving on to our next entry, salary of 2 lakh rupees paid to employees with 20,000 rupees TDS deducted. So here we will debit salary account 2 lakh rupees and we will credit cash bank account 1,80,000 rupees and credit TDS payable account 20,000 rupees. Why? Salary is an expense for the company representing the cost of employee labor. Expenses are recorded with a debit. Cash or bank account is credited because the company's cash or bank account decreases when the salary is paid out. TDS stands for tax deducted at source. The company withholds this amount from the employee's salaries and is responsible for paying it to the government. TDS payable is a liability until the company remits the tax. Moving on, let's see the next one. Journal entry 4, goods worth 1,50,000 rupees sold for 2 lakh rupees on credit to ABC Limited. Here we will debit ABC Limited debtor account 2 lakh rupees and credit sales account 2 lakh rupees. Why? When goods are sold on credit, it creates an account receivable debtor, an asset representing the money owed to the company by the customer. Assets increase with a debit. Sales are revenue, increasing the company's equity. Revenue is recorded with a credit. Here in question, 150,000 was given just to confuse you. 150,000 is our cost of goods sold, which will be booked against the inventory. In SAP or Oracle, this entry will be booked automatically. Our next journal entry is journal entry number 5, prepaid rent of 60,000 rupees for the next 6 months paid in advance. So, to book the advance or prepaid rent, we will debit prepaid rent account 60,000 rupees and credit cash bank account 60,000 rupees. Why? Prepaid rent is an asset. It represents a payment made for a future benefit. Rent in this case. Assets increase with a debit. Cash or bank account is credited because the company's cash or bank balance decreases when the payment is made. The interviewer might ask you that how we will utilize this prepaid rent. In such case, you have to explain every month we will book rent account debit by 10,000 and credit prepaid rent by 10,000 till we utilize the entire prepaid balance of 60,000. Okay, great. Let's move on to journal entry 6. Received 50,000 rupees as advance from a customer for goods to be delivered next month. Now we will debit cash bank account 50,000 rupees, and credit customer advance account 50,000 rupees. Why? Cash or bank account is debited because the company's cash or bank balance increases when it receives the advance. Customer advance is a liability. The company now has an obligation to provide goods or services to the customer in the future. Liabilities increase with a credit. Our journal entry number 7 is bad debts of 30,000 rupees written off from a debtor's account. So to record this, we need to debit bad debts account 30,000 rupees, and the other side of this journal entry would be a credit in debtor's account 30,000 rupees. Why? Bad debt is an expense. It represents the amount of money the company no longer expects to collect from a customer. Expenses are recorded with a debit as per the golden rules of accounting. Debtors, also known as accounts receivable, are an asset. When a bad debt is written off, the company reduces the balance of accounts receivable to reflect the decreased amount it expects to collect. Assets decrease with a credit. Next one on our list is journal entry 8, interest received on fixed deposit 15,000 rupees with 1,500 TDS deducted. So to book this transaction, we will debit cash bank account 13,500 rupees, debit tax deducted at source receivable account 1,500 rupees, and credit interest income account 15,000 rupees. Why? Interest income is revenue for the company, increasing its equity. Revenue is recorded with a credit. TDS receivable is an asset. It represents the amount of tax that has been deducted from the interest income and can be claimed as a after the TDS deduction. Journal entry 9, purchased raw materials worth 1 lakh rupees with 5,000 rupees as freight charges. Debit raw material account 1 lakh 5,000 rupees. Credit cash bank account 1 lakh 5,000 rupees. Why? Raw material is an inventory asset representing goods held for use in production. Assets increase with a debit. Freight charges are the costs incurred to transport the raw materials. These costs are included in the total cost of the raw materials. Cash or bank account is credited because the company's cash or bank balance decreases when it pays for the materials and freight. Moving ahead, let's talk about our journal entry number 10, dividend declared at 10 rupees per share for 10,000 shares to be paid next month. So to book the dividend declare entry, we will debit retained earnings account 1 lakh rupees, and we will credit dividend payable account 1 lakh rupees. Why? Dividends are a distribution of a company's profits to its shareholders. Retained earnings, a part of equity, is reduced when dividends are declared. Equity decreases with a debit. Dividend payable is a liability. The company has an obligation to pay the declared dividends to shareholders. Liabilities increase with credit. So that's it for today's video. If you want to learn more about remaining 11 important journal entries, comment I want part 2 and I will make a second part with remaining journal entries. Don't forget to subscribe and like this video to show